September 17th, 2025. That is the date that over 77% of Canadians are waiting for because they think it means that rates are going down and so are house prices. Well, the Bank of Canada is set to announce their next major announcement after the July disappointment of holding pat. And 18 of 28 economists, as of right now, believe that the rate cut is expected at 0.25% to bring the key overnight rate, not prime, overnight rate to 2.5%. And over 60% of them think we'll at least see two cuts before the end of the year. The truth is, for that 0.25% rate cut that you're waiting on a $600,000 home, you'll save about $78 per month on your mortgage payment. But the same house is appreciating at roughly 0.4% in stable markets. Now, again, not every market is going up to the same value, and some are actually going down. So I just want to make sure to put that in there. And the truth is, that's like basically paying $30 to save $1 if the market goes back up. And we know what typically happens when rate cuts occur. It usually brings the market boil back and, generally speaking, brings more interest in the market. Again, I'm not suggesting that house prices are about to bounce right back up. The more interesting fact or consideration in this waiting period is that you can choose a variable rate mortgage today and still have the same effect without waiting until September 17th, which is where I think I put more of my interest in the fact that they're waiting to see what actually happens at time. This is what I call the BOC trap. And I'm about to show you why the 23% chance markets are pricing for rate cut is irrelevant to your housing strategy, and why the economists calling for cuts are missing the bigger picture, and how this all affects your mortgage rate. Most importantly, why the smartest buyers and home buyers and renewers are making decisions despite and no matter what the BOC does, whether it's before or after that actual date, while everybody else is frozen and not doing a dang thing. Now, I'm your host, and in the next 20 minutes, I'm going to break down exactly what happens on September 17th, 2025. This is Alex McFadden, the owner of Flow Mortgage Co. Some people say I like to pump real estate. I'm an opportunist, not an optimist as it relates to real estate. There's a difference. I like to look for opportunities, and I don't just sit there and think that the real estate market is all rosy and perfect at all times. But the BOC has proven time and time again this decision has basically held people in their tracks, and I see it anecdotally every single day where people are waiting for this date to make a decision, which to me is the worst possible play, not because of timing, but because that means that the strategy that they're employing has nothing to do with their personal financial situation and only has to do with what the BOC says on that date. And there are a lot of parameters around that specific date. But let's start with what we actually know about September 17th. On that date, the bonds are suggesting essentially a 23% chance of a quarter point rate cut right now, with a 77% chance of a hold at 2.75%. Meanwhile, 18 of 28 economists are suggesting that we're about to see the Bank of Canada cut rates for the first of possibly 2 times for the rest of this year. That would be quite interesting. And you've got the professional economists basically betting against the markets. So what does that say right now? So numbers are kind of looking stark right now. The bank maintained its target overnight rate for 2.75% earlier this year in the July meeting. That would be 3 consecutive holds after cutting from 3% earlier this year. Prime currently sits at 4.95%, with most banks, meaning 5-year fixed mortgage rates, are running anywhere from 4.04 to 4.49, depending on the bank, the lender, and your specific profile and position. We are seeing some a little bit higher and some a little bit lower, but that's the general range that we're seeing day to day. But here's what should actually interest you more than anything else. CIBC economist Benjamin Tal expects the policy rate will be lowered to 2.5 or 2.25% by the end of 2025 or early in 2026. Even in the most optimistic scenario, you're waiting for maybe a 0.5% total relief over the course of the next 12 to 18 months. And again, I don't think it's a bad thing to want the BOC to cut rates, particularly if you're in a variable rate mortgage. I think it's a bad thing to wait to make a decision based on what the BOC could do in September, leading into the fall and, of course, into the winter. If you're a homeowner with a mortgage renewal coming up in the next 1, 3, 6 months, then you're starting at these rates being 2 to 3% higher than your previous term. And if you're a buyer, you've been waiting since March for rates to improve while they've continued to either climb or dip and then hang out in this steady space. So here's exactly how the BOC September 17th process works and why it's designed to basically disappoint people waiting for dramatic relief. The BOC adjusts the target overnight rate on 8 fixed dates per year, no exceptions, no changes. Often, there's no emergency meetings with the exception of COVID in the last 10 years. So pretty much they stick to the schedule. And the decision itself is not made by one person. It's not made in a vacuum. The trade war remained the biggest concern at the July meeting, with this constant uncertainty about trade tensions keeping with the bank's cautions. If economic uncertainties due to tariffs continue to impact consumer and business spending decisions, BOC might decide to decrease the key rate by 0.25. And of course, that's a big if. Remember, 18 to 25 economists, less than 50% of the market suggesting the same. For those renewals, you get whatever rate environment exists when your term expires. There isn't any waiting for better rates unless you decide to go an open term and just pay more money. When your renewal notice arrives, you've got to start making these decisions, and you need to start making a plan. And this is why I think the biggest mistake that people make when it comes to mortgages is making a decision purely based on the rate today, as opposed to their 3, 4, 5, 7, and 10-year plan. And of course, for new buyers, you're qualifying at rates anywhere between 3.7 to 4.4. Of course, stress testing anywhere from 5.7 to 6.4%, which is pretty significant. But the part that people often miss is while rates generally move in a tandem with the central bank's adjustments, competitive pressures can cause deviations. Your actual fixed rate is influenced often by bond markets, lender funding costs, and competitive positioning, and not the overnight rate. And with banks fighting to get lower rates right now before their October fiscal year end, it's very likely that right after or pretty closely after this BOC meeting, no matter what happens, we could see fixed rates actually rebound and increase up to 0.25% by October. Ultimately, this isn't about the Bank of Canada's decision. This is about a complex rate environment where your mortgage rate might not even drop, even if the overnight rate does. Again, that's for fixed rates. People are talking about different strategies for September 17th. Wait for the cut and get a better rate. Lock in variable and catch decline, or ignore the whole thing and just go fixed rate today. But let me explain why I think the first two scenarios could be basically disasters. If we can get the cuts economists expect, basically bringing the rate as low as 2% to 2.25% by the end of the year, that represents about a 0.5 to 0.75% in total relief on a $500,000 mortgage, dropping from 4.04 to 3.54 saves you about $125 per month. But here's the reality of waiting. Forecasts do point to some additional rate cuts between the quarter to 0.75%, but they caution expectations of a return to the ultra low pandemic levels. So if you're waiting for that crazy relief, it's not likely going to happen. Now, again, I do not think the variable rate is a bad decision at all. I want to be hyper clear on that matter. But if you're gambling based on a quarter point or a half point rate cut, you're doing it the wrong way. If they hold instead of a cut, then variable rates are going to be probably higher than fixed rates today. You're taking an interest rate, I don't know, I want to say risk, but you're taking the risk purely because of an interest rate to save 0.25%. And this is where we get back to, realistically, a decision made based on chasing the rate down is a bad decision at this point in the cycle. Look at where we're at in this rate cycle. We are not at the top anymore. We're near the bottom. People who took a variable rate 12 months ago are extremely happy. People who did today could be very happy, but I need to be clear and say the happiness is only because they have a clear strategy or plan and they want that flexibility, as opposed to purely a rate play. Even if we did get that perfect rate scenario where 3 cuts by the end of the year, bringing the overnight rate to 2%, you're looking at prime rates around 4.2, and that's still double the rates from 21 and 22, which basically everyone keeps comparing them to. Again, a best case scenario is you take a variable rate today and it goes down by 75 points, which is fantastic, especially if you need that flexibility. My point is simply to say, don't make a decision based on September 17th, and that's it. Here's what's going to happen exactly on September 17th. First of all, there's a much higher chance that they hold than they cut. And if they cut, it probably won't meaningfully change your housing affordability. In fact, variable rates will probably be on par for a quarter point rate drop with a fixed rate at that time, and maybe even still a little bit higher, which means we're left with this one option. Make your housing decisions based on today's rates and today's plan, not on tomorrow's possibilities. We could have had gradual rate increases instead of a complete shockwave from 2022 to 2024, but we didn't. The bank had to move aggressively to fight inflation, and now they're being extra cautious about cutting too fast. The latest GDP figures have reinforced the case for more cuts to come, but there's a lot of people arguing that BOC may wait for further job and inflation data. So again, we're back in this place of uncertainty without clarity. So what does winning look like with September 17th just coming up around the corner? And why the frick is everybody else paralyzed by this decision? First, understand the new math. Even with the cuts and market forecasts expected to remain at 2.75% into early 2026, edging down to 2.5%, build your housing strategy, no matter what you do, around the 4 to 4.5% mortgage rates being the new normal for the next 18 to 24 months. So if you're taking a variable rate, whatever you're taking today, that is the math that you should be using for making your decision. You also need to move if you're making a decision right now while your competition freezes. Buyers are debating to wait till September 17th, to wait till winter, to wait till next year, and I don't think everybody should jump into this marketplace. But if your decision is based on opportunity, I do believe that heading into the fall market, especially the first week of September, there could be a lot of opportunity in the marketplace where if rates are cut, you'll start to see that energy pick back up. Now, this is a regional point. You need to be conscious of what you're buying, where you're buying it, because I still think there are certain properties that are likely going to go down in value for the next 3 or 4 months as we see decisions being made. Now, the third thing is if you consider the renewal reality that 2.8 million Canadian homeowners are facing over the next 2 years, these are not optional decisions. Renewals are going to happen regardless of the rate environment. If you're in one of them, your strategy needs to be account for rates that potentially are staying where they are today. Lastly, leverage the paralysis. Sellers who need to move aren't waiting for this Bank of Canada decision or the next one. They're pricing to sell today. And I've seen some absolutely insane opportunities for people buying in this marketplace that they're not being reported. And I honestly can't even believe that they're getting value that they're getting. The truth is, you need to stop making decisions based on what the Bank of Canada meeting is or what's happening. Macklem said fellow governors had the economy as a whole in their sights, including how much spillover there is from various economic factors, which means their decisions are about macroeconomic management and not your mortgage affordability. September 17th is going to come and go. Whether they cut 0.25% or they hold steady, your housing situation will be fundamentally the same on September 18th. And the math on affordability won't change. The inventory shortage won't resolve. The qualification requirements, they ain't going anywhere. But what will change is you spend another month waiting for someone else to solve your housing problem instead of solving the problem yourself. The smartest buyers and homeowners I work with made their decisions in July or in August, or are making their decisions today, not based on a September date, but making a decision based on their strategy. If you believe the rate drops are going to happen and you believe that a variable rate mortgage is the best one for you, then it's not related to September, it's related to the long-term effects of the marketplace. And if you've been waiting since July 30th for more clarity on rates, you already know now what clarity looks like. Rates are higher than 2021 and more stable to build a housing strategy around them. I work specifically to strategize and build a plan for people that isn't based on one date in the calendar, but based on 3, 5, and 10 years in advance. And if you're tired of your situation being held hostage by the next POC decision, then just go ahead and click the link down below in the bio or send me a DM on Instagram at themortgagepug, and I'll get you set up with a clarity call to figure out what the best strategy is for you and how we can help you moving forward. If you like this episode or you found it valuable, I'd love to hear back from you. Leave me a message on Instagram at themortgagepug or leave me a rating on iTunes or Spotify. Appreciate y'all. I'll see you on the next one.